And just, to summarize a little bit about myself. So I'm a veteran in the fields of finance and technology separately for almost 20 years, but I've combined the two. I think for the last, it's like something like 12 years ago, I started combining the two. Before it was called Fintech. It was just because I'm a kind of a geek, both in technology and in finance. I was the business development manager and product manager at Trade, which is one of the biggest security trading websites in Israel. That was also chosen in Europe as one of the 3 best trading websites in Europe as a whole. I work as a COO right now at a technology company called Iconic in Monaco. And I've built operations in various startups in different fields of technology. Originally, actually, I was a programmer in the .com era, and then I became an investment consultant. And throughout the years and through what I'm doing, I had been chosen a few times for several awards and recognition about the work that I've been doing. And mostly I work with I'd say regulators, internationally and locally, enterprises, financial institutions, banks, stock exchanges, where the idea is I like to help these companies and people move ahead with the next steps in the evolution of finance. I have to say that it's very exciting because I'm used to speaking on stages, and I think this is like the 5th or 6th time I'm giving these lectures online. All right, okay. So this part, we're going to be talking a little bit about the future of investments, trading, and money in light of all these technological developments that we've been speaking about. And, we've kind of gone over many of the forces that are affecting the financial system, including the systematic entrance of the tech giants, I'd say the new business models, the startups that are not startups anymore, and they're kind of like becoming a competition to the banks. And we spoke about, let's say, a few of the I'd say technological advancements and developments that are enabling advanced interfaces and tools. What we want to speak a little more about is what's happening with Libra, what are smart contracts, what the regulator is doing, and what blockchain is. And we kind of like stopped at the point where we said that in 2009, actually 2 products were introduced into the world. One of them is Bitcoin, the token itself, and the other one is blockchain. And these products have been introduced, and they were able to, I'd say, evolve and happen, and reach this point of I'd say in the evolution of humanity, due to the ability that we have with the high power that our computers, or I'd say the high processing power that our computers have. Okay. So I'm going to start with blockchain, and then we're going to go and talk about tokens themselves. Okay? A little bit about blockchain. I'm going to ask, who understands blockchain here? I'm going to put everybody here on the screen so I can see everybody. Who feels that they understand what blockchain is? Say me. 1, okay, 2. Okay, so I'm gonna take it and I'm gonna simplify it, and if I'm not clear enough, please stop me, okay? Because this is something that you're gonna listen, you're gonna know what blockchain is in I'd say 3 minutes. It's gonna take 3 minutes for you guys to know what blockchain is. And if it wasn't clear enough, I can't see your faces, so I can't see your body language. And if you're feeling uncomfortable because you didn't understand me, say it out loud. Meirav, please repeat that, okay? So what is blockchain? Humanity has an issue, okay? When I want to transfer something of value to somebody else, let's say if I want to transfer a car or a house or money to Pavel or to Dorit, okay? We can do the transaction, but the problem is that at some point one of us can come and say the transaction didn't take place. I gave the car and I didn't receive the money back, okay? And that's a danger that all humans know. There's a problem when we move things from one side to the other. One of the sides can come later on and say, it didn't happen, I just gave it, it's my car, give it back to me, okay? What was the solution that humanity had created in order to keep track of these transactions, okay? And the answer is a third party, right? A person or a body in the middle that keeps track about what's happening, right? And this kind of I'd say third party could be a lawyer, it could be a bank, it could be the government that writes who the land belongs to or who the cars belong to, correct? Okay, we know a lot of these third party that are in the middle that kind of keep track of where things of value, where they have gone, where they have traded hands, and who they belong to right now, correct? Up to here, we're fine? Could there be a downside to this solution and a problem with having third parties? And I'm sure that you guys can turn the microphones on and tell me what could go possibly wrong with having a third party keeping track of what belongs to whom. Feel free to open your microphones.
Third party takes party to one side.
What if that's one problem is, what if they're not objective, and what if they're not, and they, you know, and they're favoring one side and not the other? More problems. What else could go wrong?
The power corrupt.
If they're corrupt, and we're talking corrupt, not only that they're one-sided, but what happens if their database is corrupted? Okay, if there's a fire, if there's a problem, if something goes wrong. And this kind of reminds me of an issue. Do you know that when 9/11 happened, you know, and the Twin Towers went down, the insurance companies paid for the computer systems, but the data that was on the computer systems was not covered. Okay, what happens to those databases if something goes wrong? What happens to those databases if somebody hacks into their system and changes things? What happens if somebody goes in and erases the databases? Okay, that's another problem of having a third party. What else? What could also be a problem with third parties?
It does not really transfer the data correctly from one side to another, no?
I'd say that that's still on the
happen.
first part, that they're not, let's say, you know, you could say that, yeah, maybe they're not, how do you say that? They're not transparent. They don't have transparency to all sides necessarily. That could happen. Another thing that we're all seeing.
Take commissions.
Oh, okay. They think they've become kings, right? Because they know that everybody needs them. So they start taking commissions for that, and they start working 4 hours a day, and you need to stand in line in order to get them. We all know this, right? Especially with government third parties that are keeping track of who owns which cars in which lands and in which houses, right? You have that in Poland as well, right? That everything that, you know. So yes, these are problems, and but humanity didn't have an answer for this, and that's how it went for thousands and thousands of years. But there was always in the background a question: is there another way to keep track of all of these transactions without needing to use a third party that has all of these disadvantages? And that's where blockchain kind of comes in. And in order to explain blockchain, I'm going to ask you all to make believe that all of us together are a group. We have, how many participants do we have here today with us? 60 something. Okay, let's assume 60 or 65 people. Let's assume that we decide to have a group of our own, and we're going to start working together. That means that all of us at the same time are going to be taking out pieces of paper at the same, you know, with the same amount of rows. And every time we do a transaction inside this little group of ours, all of us are going to be writing down the transaction. So that means that's to say, Meirav transferred Monica 1,000 euros. Everybody's writing that down. And then Pavel moved to Christian $200. And we're going to continue writing, and assuming that there's the same amount of space and rows in our paper, at some point, what's going to happen? The paper is going to finish, okay? At that point, we are all going to be doing a calculation that we decided upon ahead of time, okay? And then this calculation is going to be some sort of complex calculation. Let's say the amount of transactions divided by the amount of people times the amount of money, some sort of complicated calculation. And when we finish, each one of us finishes the calculation, we pick up the paper and we say how much we reached, okay? Assuming that everybody did the calculation correctly and nobody cheated, what's going to happen? Everybody's going to have that same number on their paper, right? And when that happens, we're all going to say, great, let's put this paper in the file. We're creating a new block and taking out a new piece of paper and all starting to write again. Okay? If one of us has a mistake and one of us is different, we double check and we triple check and we say, wait, your paper is not right. Take that away and use our paper. And therefore, again, we're all putting it in the same, you know, we're just taking that one out. And if he does too many mistakes, we might not want him on our group, correct? And the idea is that after this happens, all of us have databases in duplicates, 60 duplicates, okay? Does this solution solve the problems of the third party? Let's think about that, okay? If one of us is biased and writes wrong calculations, we're all gonna know that, right? So that problem is solved, correct? If one of us database is hacked or burnt or something like that, it's not a problem. We have 59 more copies of it. If one of us decides that he wants to change the data retroactively, it's going to be a problem because there are 59 copies of it, right? And if one of us decides, oh, this is my database, you guys pay for me, he can't because there are 59 copies of it. Okay, so that's the idea of blockchain, and it solves the problem of the third party. Okay, and in that way you have multiple databases, and the ability to do that is, again, because we have these very, very strong computers in order to do these calculations. Now this is like on the tip of the iceberg, because if we want to delve a little bit deeper, we can know that at this point, the first one of us that brought up the picture, let's say we'd want to incentivize him, right? And that's what Bitcoin does. The person that is the first one to give the calculation receives some sort of present for being the first to do that. And he receives one more Bitcoin or another piece of Bitcoin. That's how the system works, okay? And the idea is that that's one of the reasons that all of these computer people wanted to build fields of computer systems that are doing the calculation so fast, because each one of them wanted to be the first one to bring up the calculation in order for him to receive more Bitcoin, okay? So that's the idea. And the longer the time took, let's say at the beginning, a person that would be the first one to give the calculation correctly would receive a bigger amount of Bitcoins. They were minted, they were created. And right now, let's say if you're the first one, you get a very small amount of Bitcoin. That's the way they kind of fluctuate the amount of Bitcoin in the market, okay? Do we understand blockchain? Are there any questions about blockchain before I continue? You can think of it as a multiple database that is kept with each and every one of the people in the group that have decided to join together on that blockchain, okay? Now, what can we do with this? What are the use cases of using blockchain even outside of fintech, okay? So first of all, fraud prevention, okay? It's very hard to go and change what's written in the blockchain. Why? Because there are multiple copies of it, right? You can't go and change it in 50 different places. Okay, you can do supply chain management. Okay, what does that mean? Let's say if I want to buy products from a different country and I want to see where that product has gone, every time that the product changes hands, I can have it written on the blockchain, and then I can see where the product has gone, right, and where it has been, and it's on multiple places. I can keep track. Digital assets, we're going to be speaking about them in a second, and keeping track of ownership. This way we can know that now the car belongs to Dorit, whereas the house belongs to Pavel. It's just the two names that I have on my screen right now. Oh, and Christoph also. You can have the $1,000 if you want. So it keeps track of the ownership. And again, the ownership appears in so many different hands that it's really hard to come and do fraud. Now, we're going to add another layer to the blockchain, okay? And this is called smart contracts. When Bitcoin came out, it was 2009, and only after that came another company that's called Ethereum. I think you might have heard about them. And what they added that Bitcoin did not have was the idea of smart contracts. What are smart contracts? When we're moving a digital asset from one place to the other, can you guys hear me? I'm sorry, every time the phone rings, it kind of like takes my connectivity down, okay? One of the things that when we're moving digital assets from one place to the other, you could actually add pieces to that digital asset. Let's say if I'm transferring money or transferring a paper, I can also add, it's just a digital thing that's moving, I can add a little program to that, okay? And that program can have rules in it. Let's say it can be like, think about it as a computer program, a small computer program that says, let's say I'm transferring funds to somebody that is selling me, I don't know what, a shirt in China, okay? And when I'm transferring the money, it has a little contract that comes right next to it that says like this: the money is now frozen. The moment that the shirt reaches, let's say the airport, then 10% of the money can be used. The moment that the shirt reaches the next airport, another 20% of the funds can be used by the person that's getting this money, right? And when that shirt reaches the buyer, then all the money can be used, okay? That means that when we're transferring the digital fund or whatever that is, we can transfer a little program that decides how this money is going to be used and what are the terms and conditions for using this piece of digital asset. Did I explain it clear enough? Are we understanding? Okay. Now, the moment that you have the ability to put a little program, a computer program, with the money that's moving or with the contract that's moving and with the car that's moving, okay? Imagine yourself giving a lease to a house and you're saying the house is now leased to somebody else, to Christoph, but he's going to be able to use it only when, let's say, I don't know what, he paid this and this, or when we give an okay about it being written with the government, okay? And when I don't know, when he, after we paint the house. All of these if statements can be inside the same lease that I transferred from one place to the other, okay? So that's the idea of smart contracts. Now think again about what you can do with supply chain and what you can do with fraud prevention and keeping track of ownership. You can have if statements, like little programs that are in the same little database, in the same papers that we have, they're little programs, okay? Which kind of makes it a little bit more complex, but allows us to do many, many different things. So that's blockchain in 10 minutes, okay? Let's look at the other side of it. Let's talk about Bitcoin and money, okay? Are we all okay with blockchain, or do we need more explanations? Please tell me if something isn't clear. Thumbs up, we can continue? Okay, let's talk about Bitcoin. I'm gonna say something that's going to kind of like surprise you. Technologically today, any one of us and anybody in this world can create a digital currency or asset, okay? Now, it's very interesting. That means that today I can go into my computer, I can create a Meirav token. I don't know why I'd want to do that, but I can do that technologically. It's right there, okay? And it's kind of like, I'd say that we've reached the point of opening the long tail of creating money. What does that mean, okay? Do we all remember, I'm gonna remind you guys, do you remember the long tail of, it usually comes in economy where you open the long tail? And I'm going to give an example talking about videos, okay? Before YouTube was invented, a very select small amount of people, here you can see it here, they were the only ones that could create content on television or on video, right? They could go and they could broadcast it. They needed to be connected to the TV stations. They needed to have the equipment. Not everybody could go and be on primetime TV. It was a very select few, and they could do with the TV whatever they wanted. Then came the day of YouTube. And what did YouTube enable? YouTube enabled opening the long tail of creating videos. Now everybody can add videos as much as they want to YouTube, okay? Now, when YouTube was created, okay, a very big question had arisen, and people were asking, why do we need this ability, and why would people want to listen to 10-minute videos of other people, okay? And that's kind of like asking the question of today of, okay, great, so everybody can create tokens, but why would people want to, create tokens, and why would I want to buy tokens that somebody else has created, okay? But again, the technology is there and the long tail has been opened. Anybody can create money today. We're gonna go a little bit deeper into this idea in a few seconds, but when we're talking about tokens, we can look at them as two different kinds of categories of tokens. We can look at them as creating some sort of money or currency, just like Bitcoin is, or we can look at them as some sort of digital investment tool, and we're going to go into that. We're going to talk about both of them. So I'm going to start actually with creating a digital token as a form of currency, okay? And that kind of brings us back to a very basic question. And again, you guys are welcome to open your microphones. What is money?
Well, I will speak. Money is exchange something of agreed value for something else, which can be material or service or any other asset.
Okay. Correct. You can kind of like simplify it even more, okay? And simplifying is it's actually just a tool for human collaboration, okay? Because what you were explaining is how things could have worked even without money, okay? And I'm going to take us all back in time to the time before money was created. People wanted to trade things. Somebody was raising cucumbers, the other person had carrots, and the third person was raising sheep. And they wanted to trade because not everybody could raise everything, right? So how did humanity solve this problem? They created markets. And that's why we have markets on Fridays or on Sundays, depending on where you are in the world. Everybody would come to the marketplace on the same day and they would start bartering with each other. I'll give you 3 tomatoes for 2 carrots, and then I'll give you 5 carrots for, I don't know what, a sheep or a chicken or whatever that is. And they would start exchanging things. The problem with that system was that everybody needed to carry everything around, and if you have a lot of sheep or a lot of carrots, it's kind of a hassle, and you still need to be in the same place at the same time. And money was actually created in order to solve this problem of needing to be in the same place at the same time. And the first, I'd say, use cases of creating currency were I'd say, Mother Nature created currencies, and we're talking about, in some places it was seashells, in other places it was metals, in other places it was salt. Salt was a very commonly known form of currency. The Roman Empire used salt as a payment for their soldiers, okay? And this kind of brings us back to the question that Dorit had earlier. And then, you know, when humanity advanced, governments had started creating currencies. Now, all of us have been born in a time where currencies were created by governments. But this is something that if we look at a, you know, historical, I'd say, you know, perspective of 10,000 years, then countries creating currencies is just, you know, a tip of the iceberg. It hadn't worked like this. It's not like a law of nature that that's the way it is supposed to be done. And I think that we can look at Bitcoin as some sort of social experiment, and a question of why should countries be the only ones creating currencies, or something that I can go and shop and do trading with, okay? And I'm talking about trading as in buying things and selling things. Why do I have to use something that a government had created until now? And so we're like, if we're looking at the phases, then we had phase one, which was the mother, or I'd say phase zero, where people were kind of bartering. Phase one was Mother Earth created currencies. Phase two was country created currencies. And then comes phase three, where we're kind of changing the paradigms, and we're at the point where technologically users can create currencies. And we've seen a boom of this happening in 2017 and 2018 with the ICO and digital cryptocurrencies ICO rush, okay? And what happened there? Companies that had an idea would come up and say, you know what, I'm selling tokens, they call them tokens, which enable you to use my system. You're not getting equity or ownership on my system. You can use them just like you're using frequent flyer points. You can buy them ahead of time, and then you can use my system with these tokens, okay? And you have, there were like, I'd say somewhere around 10,000, 20,000 different use cases of ideas that little startups came up with, and they said, you know, just buy my token ahead of time, and it'll, you know, it'll help us, and then you can use the system, and it'll also help us fund our project, okay? Fast forward a year and a half afterwards, and the ICO boom finished. Most of the, I'd say 95% of the tokens lost 95% of their value. It mostly happened because you know, these were young people that didn't necessarily know how to build a startup, and they were like selling ideas, and people were buying these ideas without thinking behind it. But the technology is still there, the use cases and the ideas are there, but the business model was not necessarily there. So now if we look again at the idea of opening the long tail of user-generated currencies, we can see that, you know, they tried doing it, but the problem was, what is the business model? And truthfully, to this day, I have still not heard of a good use case for a business model for a person to create a token for himself. But that doesn't mean that one of us might not be the one that's going to be thinking about what can we do with this opening of the long tail, and maybe one of our children will think about this, or maybe it's going to be a little girl in Alabama that's going to be thinking about, I'm just going to be creating my own little token, and she's going to be the next Kim Kardashian, and all of us are going to be saying, shoot, in 2020 we heard that idea, why did we not think about creating a token for ourselves? But the idea is still there. So I'm saying that there's no business use case for private people to create digital currencies, but for businesses, there is a very, very big use case. And let's take a look at Libra, okay? You know, about a year and a half ago, when I was giving these kinds of lectures, I was talking about the theoretical idea that one of the tech giants would come out with a token. And I remember that I was doing a series of lectures to one of the biggest banks in Israel. And they ordered like a whole series of lectures, like 10 lectures almost every month. And there were people, you know, from the organizers of these lectures, you know, of the whole training program, that were sitting in all of my lectures. In the beginning, I was talking about the idea that maybe one day one of the big tech companies is going to be coming out with a token. And around, I think it was August or September, Facebook came out with the idea. Therefore, I need to always change my lectures. And Facebook did not only come out with this idea, she joined 20-something companies that decided to cooperate together and create something that they called Libra, which is a digital currency. And their idea was that they are actually making it a stable token so that it won't be able to lose its value. Therefore, what they're doing is that for every piece or unit of token that they're creating, they're putting on the side a basket of other tokens that have pretty much stable value, like dollars and euro and yen, and therefore it's going to be stable. And they came out and they were very, very excited. And the regulators didn't like that, and we're going to think about that for in a minute, why the regulators didn't like that. But let's think about why would Facebook want to have this? And not only Facebook, Telegram wanted this, Walmart wanted this, JP Morgan wanted to create their own token. Why would a company, what's the use case and the business case of creating a token for a company? Do you guys have any idea?
They don't need to report any exchanges. It stays in their own digital wallet, and the regulator does not know about their real business, so they don't have to pay taxes. They don't have to do anything. It's amazing.
Okay, so that's like what they're taking it to an extreme. But you have, yeah, some of the points that you said. First of all, they don't need to pay commissions to third parties. Right now, every time there's a transaction, there's a third party, taking money, both from the buyer side and the seller side. That's one. Okay. Second of all, they can reach a very large customer base, all the unbanked people. There are many people around the world that do not have bank accounts, and they cannot order things on Amazon, or unless you know what Amazon did there, and they cannot buy online because they don't have a bank account. If Facebook would theoretically allow them to have a digital wallet with Facebook money, with Libra, then they could tap into a very big amount of new customers that could buy things. And the third thing that, of course, they could get as a company is the data. Don't forget, they will know who's buying what, where, and when. Therefore, that's a lot of power, okay? But those were not the reasons that were worrying the central banks of the world, okay, and the regulators. I'm gonna ask you guys again, why did everybody go berserk when Facebook decided that they want to create a digital currency? And I'll remind you again, how many users does Facebook have? Do we all know? Somewhere around 2.7 billion people. If we take down the people that have 2 accounts, 2 billion people, okay? They are creating money that can be used for buying, and they're putting in the background a basket of different currencies. Who does that? Who issues a coin and has a basket of other coins in the background that's backing those coins?
The stock market.
Who? No, not stock markets. Who does this?
Money launderers.
Central banks.
Central banks. Now, we're talking about acting like a central bank with 2.7 billion people. That makes Facebook the biggest central bank in the world, okay? Now, can you understand why at that point, suddenly, all the lawmakers and all the regulators around the world were like, what? Wait. Okay, until then, all of these tech giants were playing with finance, and everybody was like, oh, they're so cute. And at that point, suddenly the regulators came down and said, what? Wait, this is too dangerous. We can't let somebody create money and put a basket of tokens in the background. By the way, Facebook has backed it. They're calling it now Novi, and they're trying to kind of like rethink it and put it in a way that it won't scare the regulators. It would be interesting to see if it's going to be it's going to be interesting to see if Facebook is going to be the one. Wait a minute. I'm losing battery, I'm sorry. Okay, it would be very interesting to see if Facebook is not going to be the one that's going to be creating the first currency created by tech giants, but rather it might be Amazon. Maybe, Jeff Bezos is just sitting there and saying, let's let Mark Zuckerberg do all the mistakes, and then I'm going to come in with the right answer. But the idea was that right after this happened, the regulators all over the world went, stood on their back legs and were saying, no way this is going to happen. Look here what France says. France says it'll block Facebook's Libra. Zuckerberg was called to give testimonies. The participants in the Libra project started leaving. MasterCard left. eBay left. Different companies left, and the whole project kind of went kaput. Now they're rebranding it and trying to create a better idea. It kind of like makes us stop and think, what happened here? Why did this go crazy? So we said First of all, that they've, Facebook would become the biggest central bank in the world. But there are other implications that are very scary on a macroeconomic basis, even if not Facebook itself is the only one that's creating money, but all of us are creating our own money. What are the implications that we can think about for this kind of scenario? Why is this scary? If all of us create money, what happens?
There will be inflation on money.
Oh, exactly.
And what will be the rate, the currency rate, and all what you studied the first week of economy and macroeconomics about how much money you have to reserve in the bank or in your bank. If you're the bank, so many questions.
And no production.
What?
No production.
Yeah. Okay. Okay. So that means that first of all, the moment that, okay, and I want to ask something. I see a lot of Israelis talking here, but what about the Polish friends that we have on this conversation? You guys are more shy than what's happening here?
Polish.
Yeah, you have a wrong accent. Is everything okay on our, you guys want to turn on your cameras from the Polish people from Poland? Are we fine?
More than fine.
Yes.
Yes, you're with me. Yes? Are we here?
Yes, okay.
Yes, here.
Absolutely.
All right,
Yes, it's
perfect.
okay.
Cool.
Okay. Please tell me, okay? Please feel free.
Sometimes a little bit too fast.
See, this is what I wanted to hear. Tell me this, okay? I can't see your faces, so I don't know if I'm losing you on the way or something, okay? So it's important. Please feel free, really feel free to tell me everything that you need, okay? The point is here for me to give you guys the knowledge, okay? So we were talking about, one of the problems with everybody, one of us creating money is that the amount of money that's circulating as a monetary tool, the governments are going to be losing control. There's no more control over this anymore. If everybody can create money, that means that this tool of keeping macroeconomics on a certain level that we want is going to be taken away, okay? That's a scary thought in itself, okay? The second scary thought is, what about the reserves? What does that mean? Let's say if somebody's giving a token and let's say he's loaning this token, and what happens to the reserves all over the place? Where's the money kept at? How does that work? Theoretically, if we have, it's like we're losing all the monetary tools that humanity has invented in the last 150 years. And truthfully, the financial models have not yet been created for this situation where there's an endless supply of money everywhere, okay? So that's one of the scary points of this, having this technological tool that enables everybody to create money. Now the regulators themselves, it's not like clear cut that they're going to say, well, let's stop this, let's not do this anymore. Because first of all, most regulators don't want to stop innovation because they understand that it might be the next step in the evolution of finance. When every step in evolution has its scary part, and many regulators do not want to come and stop, let's say the internet itself was also something that was scary for regulators, and most regulators around the world and governments said, okay, we're going to live with it. And the ones that haven't are kind of frowned upon, like, why are you guys closing the internet? Okay, so the same thing is applicable to the creation of money and the creation of tokens. Most governments would not want to come and close this kind of innovation and stifle the advancements that humans are creating. But there are many, many examples that even of the opposite. And I'm talking about China. Right after this happened with Zuckerberg, came China, and the head of China's of the central bank there, the Central Bank of China decided that it's going to be creating a digital currency, okay? That is called, now there's a name, CBDC, a central bank digital currency. Remember that name. It's a new form of money. It's issued digitally by governments, and China is heading this. It's already started putting it out in the last couple of weeks. But this is, I think this here, look, this is 9th of September, 2019, okay? This is when they decided that they're going to be doing this, and it's going to become the money of China. Another crazy thing happened at the same time. August 2019, the Bank of England's governor, Mark Carney, okay, came and asked a very crazy question. He asked, why should dollars be the reserves of the world? Is there a reason that the dollars should be the ones that we're keeping in the reserves? He came and said, why don't we create a new kind of currency that would be the reserve that we're all keeping in the banks of the world? Now, when he said this, there was a big hoo-ha around it, and it sounded very, very weird. But in the Davos World Economic Forum in January 2020, economists from around the world were starting to ask that question. Does the dollar have to be the reserve of the world? Why? Maybe we should create something else. Not only that, around the world started people, you know, and regulators and lawmakers started kind of asking questions like, why are we not creating a digital dollar, and why are we not creating a digital currency? And look at over here, October. Lawmakers and asked the Federal Reserve to consider creating a digital dollar, okay? Because look what they're saying. It's a risk to the US dollar if another country or private company creates a widely used cryptocurrency. And this is exactly what's happening right now, and China is the one that's most advanced in creating the digital currencies. But the nice thing is that ever since that happened, and in the last year, what we're seeing is, they called it the global arms race of the decade, is the rush to create a digital currency. And governments all over the world are playing with this. Japan has started creating a digital currency, and Lithuania has started doing this, and 6 central banks around the world are also doing this, and South Korea is also doing this, and different countries are doing this, and the most advanced are China and United States. And this is something very interesting, because this is where the pandemic comes in, okay? You know, they were thinking about this digital idea for about, you know, for quite a while. And then just like in Israel, they were thinking, let's do a digital currency, and then let's not do a digital currency. And then something very funny happened in the midst of the crisis of the COVID. The regulators started thinking about an idea. You know, we want to, you know, give people, because of this pandemic, we want to give people, citizens of America, money in order for them to keep their heads above the water in this time where everybody needs to be closed in their houses, okay? But the problem is that a lot of Americans do not have a bank account. So the question was, how do we transfer money to people that are American citizens that are eligible for that? I don't remember how much they gave, $1,000, $2,000? How do we give them the money without them having bank accounts? And then came the great idea. Let's just open a digital wallet that's going to be free in the Fed, okay? And deposit the money there so that people can come and take it out, and it's going to be commission free. Isn't that a great idea? And then they kind of, like, the American government started, like, after this came out, they started stopping and thinking, wait, if we're creating a digital wallet in the Fed and it is commission free, what are we doing to the banking system? Okay? So this idea is still being thought about and still being moved ahead, and they need to think about how exactly to do this in order to keep the stability of the banking system. All of us want the stability of the banking system. We don't want banks to go bankrupt, because there are a lot of repercussions to that and consequences, and we do not want that. But you know, we said that there's an arm race about digital money, and one of the questions is why are all these countries running ahead with this? And what can be collected along with digital money? And Israelis, do not answer now. You have taken too much airtime. People, our friends from Poland, please. What can be collected along with digital money? Sorry?
You can track all the transactions.
Right.
So, yeah, so if you don't have any money being transferred, you can track all the transactions.
All right. So that means that actually with the money and the transactions that are happening, if everything is done digitally, we can collect
Data.
Exactly. Okay. Remember how valuable data is? Remember how wonderful it is to know what people are buying and what they are thinking and what they are feeling? Okay. Do we all remember what happened with Facebook and the Cambridge Analytics system, where they took the data from Facebook about what people's ideas were, and they, you know, that allegedly showed different commercials to different people and tried to affect the elections? Now imagine that you have the knowledge about what people are buying, okay? That knowledge and that data is very, very valuable. But it's even scary if you take into account this little piece of the puzzle, okay? Have you all heard about the social credit score being developed in China, where people are getting graded according to how they are behaving, okay? And what they are buying and what they are doing, okay? Now the credit score in China, if anybody's seen the series Black Mirror, there was a chapter about that. Okay, the idea with China, though, is that you're getting credit score, and good actions like volunteering give you more score, and bad actions like littering are tracked using algorithms and artificial intelligence and facial recognitions. And there are real consequences, and the consequences are more taxes or less taxes, which hospitals you're going to be getting your service from, and which schools your kids can go into. Okay. So again, we're seeing a technology and an ability that is a two-edged sword. And the question is, who's going to be using this and where is this leading? So I don't know what's more scary, having the regulators having this data or having Facebook and the tech giants having this data. China came out with this idea. They started the distribution of this a few weeks ago. They gave presents like red envelope lottery systems, 20 million of the digital yuan. That's somewhere around $1.5 million to locals. People have applied to receive it. The infrastructure is similar to Alipay and WeChat. People were kind of unhappy because it wasn't as fast as WeChat and Alipay. But I think the idea with bringing this example is noticing that the central banks are playing catch up with existing providers because they understand that WeChat has this knowledge, and for them as a government, they want the knowledge for themselves. So please notice that money and data are so entwined. Remember the idea with Shiru? Remember this idea? And it's very interesting about, let's say, would the next currency actually be the data itself? And are we in, and when we're seeing the evolution of money, is data the next kind of currency? Is it digital currencies? What is it? Okay. And we don't have a lot of time, but we did speak about this side about digital currencies as money. But let's take a look at digital currencies as an investment tool, okay? We all know that there are very specific asset classes. I think there are, what, 6 or 7 that we all know about, okay? Bonds, stocks, ETFs, mutual funds, options, and all the rest of them. During this time of the creation of, with the ICO boom, a new type of asset class was introduced to the world, and it was also named a utility token, okay? And it's still not, I'd say, as common as stocks and bonds, and it's still not fully regulated, but according to the regulators in the world, there is a new type of asset class that we already know about. It's called a utility token. And what's a utility token? The easiest way to think about it is like a frequent flyer points that are issued, and they allow the people that is the person that is holding this token to use the system of this token. You can look at it. Let's say, imagine yourself getting tokens for frequent flyer points, and you can buy more mileage with these tokens. Okay, or I don't know if you guys had in Poland the ability when you wanted to talk on a public phone. You had little coins that were specifically for phones, not the regular currency was there. You could use these tokens for the phone. And if we're talking about, let's say, Ethereum, you buy Ethereum tokens to use it as a way to pay for your services on the system of Ethereum, okay? All of these were dubbed by the SEC and the rest of the regulators as utility tokens, okay? Why were they called like that? Because when all of this ICO boom happened, the regulators started looking back in the book of rules, and they started asking themselves, these little tokens, Bitcoin, Ethereum, Ripple, are they securities? And what they used was the Howey test. Do you guys know the Howey test? You're all from the financial system, so I guess you guys do know the Howey test, which decided whether or not some sort of asset is deemed a security or not, okay? And the Howey test has 3 questions. Does it have, is it connected to the value of the company? Does it have the ability to grow or become smaller in its value because of the value of the company? And the set of rules of the Howey test. And the utility token did not answer any of these questions. Therefore, the SEC could not say that it's a security. Therefore, it was dubbed a utility token. Okay, Bitcoin is a utility token. Ethereum is a utility token, and tens of thousands of other tokens around the world were deemed as utility tokens. Okay, they're not called securities because they're not securities. Okay, but it is an asset class, and people do invest in them and want to buy and sell them, and the price goes up and down, and it acts like a security, but it's not exactly that. But the idea is that even if we take out the utility tokens and look at other things that can be built with digital tokens, we can see that there's a whole new set of asset classes that can be created. And we're going to call them digital securities or security tokens, and they don't even really have a name yet, okay? And what are we talking about? There are a lot of types of assets that are very hard to liquidize, okay? If we're talking about artwork or real estate or land, okay? The problem is, say, let's look at a Rembrandt picture. If somebody has a Rembrandt picture and he doesn't have any more money and he just wants $100,000, okay? Can he take this picture and divide it into pieces and say, you know, you own a little bit of this and you own a little bit of that, and then sell just pieces of that picture and receive the $100,000 that he needs? No. What he needs to do is put the whole thing in a safe place and then receive a certain amount of money, and it's a whole mess and it's not liquid. Okay? Same thing happens with land and with buildings. But the idea is that now, technologically, you can take a Rembrandt picture and you can decide to divide it into tokens, let's say 100 tokens for that matter, and you can decide that you want to sell a certain amount of these tokens, okay? Now, these tokens give ownership. They can come, remember, with a little program, with a contract, and they can give ownership on the picture, on the Rembrandt picture, and they can be sold. And now look at the interesting thing. If these tokens are then traded on exchanges, because I didn't mention, but all of these utility tokens, there are exchanges. There are multiple exchanges around the world that use utility tokens and digital tokens, okay? There are a lot of exchanges like that, okay? And you take this little token that is connected to the Rembrandt picture, and you put it on an exchange that is like a secondary market, right? That means that both sides win. The owner of the Rembrandt can liquidate a certain amount of his picture, and private investors can finally have the ability to invest in art, which they don't have right now. Okay? Is this idea clear enough? Am I explaining this clear enough? Not Israelis, Polish people. Is it understood?
Yeah, clear.
Yes? Okay. All right. So this is a new type of asset class. We can liquidate all sorts of assets that have not been able to be liquidized until now, okay? We're gonna look at real estate in a second, but I want to give examples of other kinds of assets, okay? You can create, let's say, a token that gives dividends, but it doesn't give equity, okay? Or you could create a token that gives you discounts when you're shopping. Let's say if it was an Amazon token, let's say people that hold 100 Amazon tokens or more on Black Friday can receive, instead of 10% off, they can receive 20% off, okay? You can build different kinds of securities and assets, and you can program them in themselves, okay? And you can redeem things, okay? So so what I'm talking about, new types of asset classes, it's not 1 or 2 or 5 different asset classes. The truth is that technologically today, we can create hundreds and thousands of different variations of asset classes that give partial ownership, or the ability to buy things with them, or buy with sales, like I said, okay? They could give dividends. All of the combinations, like open your mind to different kinds of asset classes of every different kind of idea that you could possibly have. It's possible technologically to do it, okay? Let's take a look at things that have already happened. And I'm going to be bringing 3 use cases from the real estate world. One of them is the St. Regis Aspen Resort, okay, in the United States. They actually did their token sale on Indiegogo, okay, which is, do you guys know Indiegogo? It's like a crowdfunding platform, okay? A regular platform where you can sell things and crowdfund. They just sold tokens there, and what they did is they sold Aspen coins, okay, that give the purchasers a fragmented equity ownership at the St. Regis Aspen Resort in Colorado, okay? And that's the way that they raised the money, okay? Another example, you have buildings in Manhattan, you have buildings all over the United States from New York to Texas in the CRE marketplace that have tokenized a big amount of worth of real estate. You can do the same thing with a building or a house. Let's say if I want to buy an apartment and I can't, you know, and I don't have all the money. You know, the regular traditional way is to go and get a mortgage or ask your friends to give you a loan. But then how do you do the ownership and divide the ownership between, let's say, 100 friends that are each, I don't know what, giving you 1,000 euros, okay? What if you went and you created a token on your house and you're giving these pieces of tokens to the people that are lending you money, okay, or buying part of your house? And then if you're renting that apartment, you could actually be giving a dividend to each and every one of these token holders, okay? Am I clear? Am I bringing it clear enough examples, or is this like too far-fetched? Feedback? Did I leave you confused, or is this clear enough?
No, clear enough, I think.
Yeah, okay. So now when you see, you can see that you have, what I'm saying, that there are thousands of different use cases that you can use these types of assets. You can see, think about any asset that you'd like to divide and give ownership or give dividend to without ownership, let's say, okay? You can create these without a problem. And the stock exchanges, or I'm gonna say, sorry, the digital security exchanges already exist, okay? Some of them even have regulation, okay? So it's a matter of time that these kinds of assets will be available for any type of investor all over the world, okay? Last example, Japan. This is really new, okay? And 3 Japanese companies teamed up to launch what they call the first real estate securities token offering for retail investors in Japan, and they're doing it for retirement homes, okay? And we're going to be seeing more and more and more of these examples because they're not doing anything wrong legally. Let's say the Aspen Resort, they actually received their green light as a security token from the SEC. They went through the whole regulation part. They have a little stock exchange in the back. Sorry, stock exchange. They have a little exchange in the background, okay? And people can, you know, it's liquid. So now this ability, this technological ability, kind of raises again what a lot of questions. What type of asset classes are going to be created? Are there going to be new exchanges for these assets? Okay, will these be based on blockchain and traded 24/7? Because one of the things that could happen, let's put aside the new asset classes, is taking the traditional financial investment world and moving it itself onto blockchain. This is a different direction. So we talked about asset classes that can be built, but let's look at a different kind of use case, and that is taking our traditional securities trading world and moving it on to blockchain. And here's an example. The National Stock Exchange of Australia will soon launch an automated trade clearing and settlement platform based on blockchain technology. Now, what's the advantage of moving the existing security trading platforms onto blockchain? What is one of the problems that we have? If I buy a stock right now in an exchange in America or in Europe, when does it come to me? When does the settlement happen? T+1, T+2, right? We have traders here, right? We have brokers and traders here with me. When you do it on blockchain, it's the same day settlement. Not only that, this is what Australia is doing, okay? So it's going to be same day settlement, no more T+1, T+2. We're going to be seeing it the same day. Not only that, it's going to be up to date with the accounting on every side. Everything is going to be written at the same time, and you won't have to have all that back office junk happening with all the papers and all of the track, you know, keeping track of what went where, okay? Everything is going to be automated because everything is on blockchain, okay? We're kind of like coming to the end of our session. And before we move to the other innovation and robo-advisors and the rest of the stuff you wanted to talk about, I just wanted kind of like you guys to stop and think about this, that think about how a new innovative technology, it's like a drop of water, Bitcoin, blockchain, okay? And now think about the ripple effects of how it can reach. It started out as something that geeks were doing, and then came more geeks that started playing with it and saying, wait, we can raise funds like this and we can create tokens. And then came other big companies, and then came the regulators, and then the regulators decided that they want in on it. And then we understand there are new asset classes, and this is just one new type of technology and the ripple effects that happen from this, okay? You can't say that we're not living in very exciting times, okay? Let's leave blockchain and crypto aside and talk about alternatives to traditional investments and, you know, and advisors and trading and tools, okay? And I'm going to go over them. And if you want me to stop because you don't know these systems, please tell me. eToro, who knows about eToro? Okay. eToro is a company that decided to, I'd say, use the wisdom of the crowds for investing. What does that mean? It allows users to open their portfolio and, you know, their securities portfolio, and they can trade and buy stocks just like any other broker, and they can buy stocks and build their own portfolio. The only thing though here that happens is that if you create a lot of revenue and your how's that called, your portfolio makes a lot of revenue, you kind of like jump to the beginning of the list and all the other traders can see what you're doing. Not only can they see what you're doing and learn from you, they can follow you, okay? And not only can they follow you, they can decide to copy, okay, your asset management. That means that if you have, let's say, 10 Israeli stocks, 15 American stocks, 3 bonds, and 2 ETFs, the person that is following you can decide to just copy that and decide how much money they want to put. Let's say I want to put $10,000, just following the same kind of activities that the person that has been creating the best revenue for the last 5 years has been doing on eToro, okay? Now, this is very interesting because it's kind of disrupting the whole idea of analysts, it's disrupting the whole idea of how's that called, portfolio managers and advisory advisors of stock exchanges. You can just copy people that are actually creating revenue and bringing really, really good results with their investing. Okay, so that's the idea of eToro. They've taken many steps ahead on this, and they're using the wisdom of the crowds. When I was working in Bank Leumi and in charge of the business development and the product management of Leumi Trade, we wanted to create this for our users. And we put a lot of features there because, you know, do you guys know the story about the wisdom of the crowds? You know this kind of theory? The theory of the wisdom of the crowds, do you know this? Okay, in a minute, I'll take 1 minute of your time and remind you this story. England, 1500 and something. Somebody came to the market and said, he brought a cow, a big bull, and asked people, what is the weight of this bull, okay? And people were shouting, you know, and he was keeping track of who said what. And the thing is that although there were like 1,000 people or 100 people or many people saying different weights on, you know, on different scales, the funny thing was that on average, if you take the average of all of the ideas of people, it was the exact weight of the bull, okay? It's called the wisdom of the crowds, and this thing has been tested in universities all over the world, and they found that there is wisdom in the crowds. Even though people have speculations in different areas, the average of all these speculations is usually pretty accurate, okay? Now imagine yourself the ability to come and ask the crowds, okay, what is going to be the value of Amazon security in a year from now, okay? Now if you ask 100 people or 1,000 people, most likely the price that they're going to be saying is actually pretty accurate, okay? Statistically, at least. Now, that's something that wasn't possible to do as long as, you know, not everybody was connected to computers. But remember, we're now connected all over the place. So you can actually use the wisdom of the crowds in order to diversify your investments and check the prices. And you don't need the analysts that are sitting and doing it. You just ask the crowds, you get a price, and you decide if you want to believe it or not. So eToro is using the wisdom of the crowds in different ways in order to allow people to invest, okay? By the way, the people, you know, I'm not going to go into this, but it's very interesting. Whoever is investing can see a new kind of way to look at investing models and look at the company eToro. The next idea is algo trading, and this is kind of it. You know, today anybody can come and create their own algorithm, and they can decide. Let's say if you see the prices of wheat going up, I don't know what, sell the stock of a company that has to do with food. Okay, you can do these algorithms and decide and give, you know, orders ahead of time using the data that you have access to. But I think that the most advanced system that I've heard of that uses this predictive kind of data analysis is actually not in investing at all, although it can be used in the world of investing. And that is the machine that Kira Rudinsky created. Have you guys heard about her machine? Kira Rudinsky is a young woman. She's only 34. In 2016, she sold a startup to eBay, where what she was researching was checking if she looks at patterns that happened in the past through Google, okay, of things that happened in the past and watch the sequence of what happens, you can actually kind of predict the future. So let's say what she noticed, and she got a prize for this recognition, okay, for being able to predict the first outbreak of cholera in Cuba after 130 years. What she noticed, she's mostly in health, okay? What she noticed was that if you have a country that's poor and it has a drought for many years, and then come a lot of rain, there's going to be cholera in that country, okay? It just happened so many times in the past that she was able to predict it. Now, she could explain it later, because what happens is that if it's a poor country, they don't have good sewage systems. If there was a drought, then when the rain starts coming in, then the sewage system starts coming up. And then what happens is that when there's too much water all over the place, people are drinking from the water that seems to come from rain, but it's mixed with the sewage system. Therefore, people are getting sick and they get cholera. Okay, that's Karadinsky's model, and she was able to duplicate this on different things, and eBay bought the system because it was able to predict which sellers on eBay are going to be creating more revenue in a few years, according to past results. Okay, now if you take that and change that into algo trading and change that into the worlds of investment, you can come and find very interesting things. Let's say her machine found out that if there is an earthquake in, I think it was Japan, then she expected the price of the Apple phone to go up. Why? Because she found out that the chips are created in Japan and then they're moved to China. And if there's an earthquake there, that means that the chips are not going to be transferred into China. And then there was like a whole sequence of events. And eventually what happens is that it's going to be more expensive for Apple to create the phones. And therefore the price of the phones is going to go up. And then she was very sad. You know, in her lecture, she says that she was very sad to know this, because when she saw this happening, she noticed that the price of the phones did not go up, even though this happened and her machine predicted it. Okay, why? Because she didn't know that Apple has a price limit for their machines and they're not going to fluctuate their price. But now look at the same scenario from the eyes of investors. What does that mean? If the price is set and the price of production goes up, what does that mean about the revenue? It's going to be smaller. What does that mean about what's going to be shown in their financial reports at the end of that quarter? It's going to be smaller. What does that mean about the price of the stock? Okay, so now use this kind of deep analysis, predictive data analysis and data mining, and start using it for algo trading and trying to understand how different things that happen, earthquakes in Japan, can affect the price of the Apple stock. Okay, and people are using these kinds of systems and banks are giving these kinds of systems, but the more you have computing system, the system is going to be more easier and interesting to find different correlations between things that seem to not have any relation from one to the other. Robo-advisors, Monica, how long do we have? How tired are you guys? Are we okay? Can we continue? Do we have another 10 minutes? Yes, no?
Yes.
Okay. Robo-advisors.
Go ahead.
Okay. All right. Let's talk a little bit about robo-advisors. I'm guessing many of us here were investment advisors. I was an investment advisor once upon a time. And the idea with robo-advisors, for those who don't know, it's a computer system that asks the questions that investing consultants were asking their customers. Okay, and the idea that when investment consultants wants to build a portfolio for a customer, they need to understand what the money is for and what the risk tolerance of the customer in front of me is. Okay, and then according to that, I build a portfolio. The thing is that the set of questions and the, I'd say the outcome and the decision of what to invest in is something that a computer can do. And that's the idea of robo-advisors, okay? They come and ask the questions of the people, they understand what the risk is, they understand what the money is for, and then they build a portfolio according to what the analysts say that are good stocks in each of the different kinds of assets that you want to build when you're building a portfolio for investors. I'm sorry if I'm talking gibberish for people that do not come from the worlds of investments right here. Now, the idea is this, that robo-advisors that become, I'd say, more and more common in the last 3-4 years. And if we're looking at, they're mostly at, aimed at retail investors. And by the way, at the time of the pandemic, the amount of retail investors in the stock markets in the United States have grown from around 10% to 20-something%. And most of them were young investors. And the idea is that around 10% of American households have robo-advisors, and some of them don't even know it, okay? And the idea is that robo-advisors kind of like make the need for investment consultants to become obsolete, and even customers that have big portfolios of funds do want a certain amount of their assets to be run by a robo-advisor that takes a certain amount and maybe creates better revenue, okay? So that's what's another interesting point to look at. Most robo-advisors by the companies that we know are aimed at retail investors, but again, even big companies are using it to diversify their portfolio. Another thing that we should notice in the world of investment and trading is the new standard, no commissions. Okay, now no commissions is happening not only in Robinhood, which we all know, but JP Morgan, digital brokerage, has been offering free trades, portfolio building tools, and research access for no commission. Again, what is the business model? Instead of commissions, data, okay?
Data, yeah.
Data, okay? So again, this is very interesting because if we see a person that has you know, you can know so much about a person if you're collecting his data and the way he is investing. When is he investing? When there's more money or when there's less money? Is he a person that is scared and then the moment that he sees the markets going down, he sells even though he has a stop loss there? Does he put stop losses? Does he put, you can learn so much about people and you can offer them more and more products according to the type of person that you're seeing. And this is the direction that not only banking is going into, but also investments and trading. Two last startups I want to talk about. One of them is called Capitalize. Have you heard about Capitalize? Capitalize has come and is disrupting I'd say how's that called? The trading form, right? All of us know the trading form. We fill out the amount that you want. Is it limit or market? What's the price that you want to sell it? Is it for today? Is it for tomorrow, right? We fill out the form. The idea with Capitalize is that it's natural language processing, that it allows people to just come and type a question. If the price of, and then you have drop downs, right? If the, and you can say price, you can choose it, or the, I don't know what the value of something, let's say grain, oil, whatever that is. And then you can say goes up, goes down. You can just choose it or type it. Then you can put the word then, buy or sell. And you can write the word of let's say a certain stock, let's say Delta or something like that, okay? And you can just type any trading order that you want, okay? And this is a really cool feature that many big banks around the world are using. And the last one is Fininvest that I'm kind of like bringing you ideas that have to do with trading that are kind of like, the idea is change the paradigms. Everything that you see that we're so used to, like in the